Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's September 24th. Hope you guys had a great weekend, and hopefully it'll be the start of a great week here this week as well. We do got a lot of data coming out this week. However, today happens to be a slow day. We don't got any economic calendar on the anything on the economic calendar for the day. But Friday we'll get the Fed's favorite gauge for inflation, which is the PCE, or personal consumption expenditure. We also got some housing data coming out this week as well. And one of the more important things is the Fed meeting is this week. So they start their two-day meeting on Tuesday and will give their announcement on Wednesday. It is highly likely that they will be raising rates by another 0.25%. What will that translate? It could bring us into basically what they call the flat yield curve. So what that means is the 2-year Treasury and the 10-year Treasury should be about the same, where there'll be a flat curve. Typically, what we've seen in the past is that the concerns about that is when we get to a negative yield curve is when the short term exceeds or is greater than the long term, and that could happen eventually in December. So there's about 75% chance now that the Fed will continue raising rates, and that will be the next one will be in December. So that is the concern thus far, because typically historically that means that we've kind of gotten into a recession within a year afterwards. Typically within a year, it takes 6 to 8 months for these when the Fed raises rates, 6 to 8 months for the economy to absorb that, and so probably late next year is potentially we could fall into recession, and that is the concern behind it, especially with these talks with the tariffs and everything else. So speaking of such, stock market's down. It was kind of a reminder today that the implementation of the $200 billion worth of tariffs on China went into effect, as China's $60 billion tariffs on the U.S. went into effect as well. So this is kind of the reminder of the escalation of these trade wars or trade discussions that are going on between the U.S. and its partners. Also, there were some comments made by the ECB about comments in regards to inflation in Europe. So that isn't looking good for mortgage-backed securities, as we'll kind of take a look. In Europe, you're basically saying that inflation's getting a little high over there, and that's a concern over there. So here's how it looks like. The mortgage-backed securities, we're up for the day, but we start the day lower than this floor of support here. And right now we're just kind of hovering slightly above it. We're down about 5 basis points from where we left off Friday. However, it's not quite enough to give us worse pricing than when we left off on Friday. But again, something we want to keep an eye on. We are in this on the stochastic crossover. You can see how long it's been. It's been almost 2 weeks. We've been kind of this flat line here. And at some point, we kind of feel that it's going to, it's oversold position. We think it's going to rise upwards, and it could be this week when the Fed announces its rate hikes, because typically what that means is that one of the reasons that the Fed raises their rates is to stave off inflation and keep inflation in check. So usually that's a good sign for mortgage-backed securities, because the biggest evil, or the biggest nemesis to mortgage-backed securities, is inflation. So inflation gets out of control, it takes away the value of those bonds, and basically it lowers the value of those. So by keeping inflation in check, the value of those bonds stay in check or balanced. So same thing with the 10-year Treasury. As we can see here, we've been kind of this flat oversold or overbought position here, and at some point the yield's going to have to pull back to get that leash effect we talked about late last week, bringing it closer to the 25-day moving average here. All right, so that pretty much wraps things up here. Again, kind of a quiet news day, but today was the first day for the tariffs to be implemented, and so if you guys want to get any more data, just come over to Twitter. You can find me at Mike Bjork. I do post updates on Twitter throughout the day. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys on tomorrow. Bye-bye.